Yo, yo, yo. This is Zillow. So, we're going to talk a little bit about the Zillow thesis, what I think is going on with Zillow, why I think Zillow could be a crazy compounder, why I think it's a crazy pick and shovel play on the world housing market for the next few decades. So, just like talking about the ecosystem of the housing market right now, you've seen median sales prices of houses just go skyrocketing. Actually, a lot of this has to do with currency and inflation in general, inflation of assets, housings amongst those things. In Peter Lynch's book, One Up Wall Street, he talks about how houses are actually one of the greatest assets you can buy and own, and you should probably get a house before really getting like a six-figure stock portfolio or like something crazy like that. So, and then here we got the supply of houses. Over here, you see towards the pandemic lows, houses were just being like bought, like just being, I guess, filled or bought up like crazy, like into the summer of the pandemic. And it's just now starting to rebound back to like nominal levels, not even like just like nominal for the past decade, not even like nominal for historical since like the when does this chart go back? 63. So yeah, so that's a really interesting trend. This that the supply of houses has been depressed pretty much ever since before the financial crisis in 2008. This article here, so this is about investment firms that are buying up all different types of houses, but it's talking about how they're actually buying they're buying specific houses that is problematic for I guess standard income earners and their wages and their earnings and just their budgets and what they have to work with. So this is just some of the notes I wanted to point out from the article. This is actually a copy of Paster right here. I'm not like going to take credit for any of this or anything like this. This is all straight from that last article I just showed. And all this will be in the description, by the way, please. And so it talks here about like the median prices of houses increased 28% in the last 2 years. Like I said, a lot of that is crazy economic circumstances, pandemic-driven demand. They talk about corporate investors snapped up 15% of U.S. homes for sale in the first quarter of the year. And they're talking about like, is this abnormal amount of like corporate buying in houses? So this is really interesting here. It talks about Invitation Homes. This is owned by Blackstone. You're going to see Blackstone a lot. This is actually private equity. It's very different than BlackRock because of that. And they operate in 16 cities. They own, this is crazy, they own 12,556 houses in Atlanta. And basically, they don't have to pay as big of interest rate as like other like a normal home buyer. So a normal home buyer here would have to pay between a 2 and 4% interest rate. But what they can do is they can borrow for around 1.4% because they're just a larger entity. They can secure that kind of loan at that lower interest rate. They don't have to worry too much about like those kinds of like credit demands of people being like having to be at a certain threshold or anything like that. People can't reach those kinds of thresholds. So what happens is these entities then have just a little bit extra cash on hand because when they work out the macroeconomics of the deal, paying a lower interest rate, they're like, how about we buy this house off your hands for extra $5,000 or $20,000, and then when they come up to people all in cash, which is again another thing that's harder for normal people to do, it's like, maybe I will take the deal with Blackstone, maybe I will take the deal with BlackRock, and that's just kind of how it's been happening the past like 2 years or so. And according to a recent SEC disclosure, Invitation Homes portfolio is worth a total of $16 billion, and they collect around $1.9 billion in rent per year. So that's like a ratio of 8. And then this is from a professor. A professor of economics. He talks about a ratio of 20-1 is about the normal thing you see in like real estate. So a renter to purchase ship of 20-1. So price to rent ratio. That's what it's called. But Blackstone over here is only paying a ratio of 8. While as normal people normally having to finagle for 20. And the other thing that's interesting is when it gets really high, it's just everyone just piles into renting. And that's kind of what's been happening lately, is just because it's hard to get a good price on housing. So people can make a killing on charging rent. Anyway, yeah, this is just some of my this is my research document. This is a really interesting article. It's about kind of like the lustfulness that like Gen Z, millennials and all that, they kind of have on Zillow. And that's the thing, one of the huge points about Zillow, it is very, the tech savvy generation just loves Zillow. And that's what you see in this article here. It talks about how people's kind of like lust for like just kind of like looking at like, oh, this, like, to live in this home, or like to buy this home, or like I have this much money, how do I make this home my reality in the next like X amount of years? Like, everyone has their like dream or thought, or just they want to like daydream or whatever on the internet. And then it's like from lifestyles of the rich and famous and MTV Cribs to hashtag Friday Night Zillow. And it just talks about like the real estate being a long time American obsession. And it talks about how some people have turned this into like real estate porn because they're just spending like hours on it, and just like time is going by and they're just like scrolling through Zillow. So So if your coworker seems a little distracted on a video call, there's a decent chance he's looking at listings in another browser tab. Because yeah, it has been a really hot market where people just have to always stay like vigilant, and these things could get gobbled up left and right, and that's been what it's been. So yeah, that's the housing market for you right now. This is a clip from one of my favorite comedians. This is in May 2020. I believe. Yep, right here. And he was talking about just one of his experience talking to a realtor in the South California area. Let's take a listen.
Beautiful. So I get on the phone with this woman and she's like, "Hey, Tim, how are you?" And I'm like, "Good." And she's like, "Let me tell you something right now. This market in Malibu, it's a real knife fight. It's a real knife fight down here in Malibu. I don't care what the government's saying. People are snatching up properties left and right. So I'm just letting you know what it is." And I'm like, okay, I don't want to get into a knife fight in Malibu. I can't. I will get into maybe a shoving match in Silver Lake. Maybe a fender.
All right. Yeah, but you get the idea. Like, everyone in the real estate industry is just like loving this environment right now because it's like volatile, it's hot. They're closing for like this much above what they thought they'd close for, and like the other thing you got to consider is that commission for real estate in the U.S. is typically nominally at 6%, which is kind of crazy to think about. Like, for just a transaction of just a person being like, "Hey, I'm your like sales agent" or whatever, that person just takes home like 6% of like what the house is like worth, and like the sale, and like that's like all docked on at the end and stuff. So that's crazy to think about. One of the reasons why Zillow has a crazy stock chart, I'm just gonna segue real quick, is because they went into, hey, we're gonna do an iBuying business, and that shot it up right here around like October 2021. And it got to like absurd valuations just on like that news alone. And they did make some moves too, started like pulling some plans and like buying up some housing inventories, kind of like start moving into like the iBuying. And the huge draw was that Zillow iBuying was only taking like a 2% commission. You know what I'm saying? So it's just this like iBuying entity that's taking home just so much like more convenient of a commission compared to what a normal real estate agent would take home. So that's why people have been talking a long time about there is room for disruption in the real estate market. Now for Zillow, the iBuying didn't end up working out, which is bad for some people who bought up here. But yeah, all that is to me very much priced out. I will go more on that later when we look at like the balance sheet, income statement, and all that. Oh, I'm sorry. This is. Let me pull up Zillow. But yeah, they had a very similar chart. I'm very sorry. It's just like up. Yeah, it's up and down. So, yeah. So no, the iBuying news must have like came in around here. It really like gassed it up, and yeah, it definitely didn't end up working out. And there's just huge red candlesticks down here, and yeah. So like I said, I think like all that hype around that iBuying event I described that led to like that top. It's all very much priced out, and I just wanted to point that out. Um, so yeah, so brings us to our company of interest, Zillow, and like I said, it's just got a great UI, um, super friendly with millennials, Zoomers. All the like tech savvy boomers, I think very much can easily use Zillow. I know a few that have been able to do just very much that. So it's definitely like anyone really could use it. Just as long as they kind of like maybe have someone show it. Like if they have any familiarity at all in technology, you could probably like at least browse the listing on Zillow or. And Zillow is interesting because it's almost like a Google for like houses. It's a Google. It owns the funnel. It owns all the people going like ideas and listings and what's out there and valuation of houses. Like it owns like the vast majority of all that resource. Um, so this is really interesting. They're always like updating to just like the UI, the interface. They now have this like super cool compare feature, and it just easily puts like houses side by side and all the amenities and all that. And it's they to me Zillow is one of those, and once you use it you'll understand what I'm getting at here. They're really trying to refine that smoothness, that fluidness in UI, and always be a leader in that, just being that easy resource to buy or sell a home, look up things, be the Google of the housing market almost. um, you can see here what percentage of people use Zillow. It just goes back to what I was saying about how they own the funnel kind of thing. Um, 29% of real estate, yeah, 29% of the traffic comes through Zillow. They own 130, they have, I'm sorry, 135 million properties listed in their database. And but this is the stat I thought was interesting. 80% of US homes have been viewed on Zillow.com regardless of their market status. 80%? So 4 out of 5 homes have been like tinkered around with via this Zillow company. That's crazy. And this is just a quick little thing from Motley Fool. They were talking about how, I was talking about the stock chart here. I'm very sorry about when I was showing the SOXL. If it, the stock chart here, you see the top and then the bottom. So like the iBuying, that was crazy. We got to like crazy valuations and it sold off. And like it was almost like a disaster because like investors were panicky because Zillow bought homes. They legit were making moves. They were like, we're buying, like dropping millions, M's, hundreds of millions on houses. So they were doing the same stuff like BlackRock, Blackstone, all those guys are doing there for a bit. And it didn't end up working out. Their business didn't work out. It was an ambitious move, and the management was very, um, you know, when you make a mistake, you just go, hey, this happened, but this is what I'm doing about it. And that's the thing. Management's been doing a good job about unloading that inventory. So they were projecting that they could lose anywhere from like 240 to 265 million from this iBuying inventory flood they went into, and then they're all of a sudden trying to like liquidate out of. And now they're thinking they're only going to lose 93 million because they've patiently been liquidating that inventory, and they've been trying to liquidate it at like good prices and like do everything and just make sure they don't like mess up their whole balance sheet because of this whole finagle. Um, this I love this. This is the Google Trends chart of Zillow. So pretty much since like 2004, see a huge pop in like 2006. But look at this, it just goes up and it's up and it's up and it's up. Like that is crazy. it is just compounding so continually, just gathering more interest and more interest. I really do believe that this is a program that is just gonna get double digit growth for like the next decade going out easily. And can point out some reasons. So this is the income statement. This is very much a growth stock. So I normally do kind of look for things in the value region, but I think this, because of their cash generation, this is more of kind of like a growth of the reasonable price type of play. And you see here that growth has just been outperforming for the past 5 years or so. And a lot of that does have to do with the low interest rates and things of that nature that I've been seeing in the U.S. You see this huge outperformance of growth here. A lot of that because of the economic environment we've been in the pandemic and post-pandemic, post-vaccine kind of world. Um, but yeah, I mean, check out these incredible year over year changes in revenue. I mean, incredible revenue growth. But you just won't see in value stocks all these red numbers because they're spending so much money on them. They're just burning cash, just trying to like business, 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 and so that's why you see that's why this is just very much not a value stock at all. This is very much a growth stock. This is a company that is burning money on themselves. Um, yeah. So the balance sheet, they're they've I'm I'm pretty optimistic that this business holds up pretty well because their assets to liabilities is not, for me as a higher risk investor, is not undoable right here. But everyone do your own research on that. The valuation, the historical valuation, this is what I'm most interested here in. I think this is a phenomenal time to buy a phenomenal business with a really sneaky moat. As I said, it's almost like a Google search engine of the housing market, just collecting money off of listings. They have mortgage, escrow, title business. They have, like commissions that they collect from their listings and things like so. Incredible business with a lot of different hands and ways that it gets money and acquires business. So, yeah, it's just a very fine time to buy Zillow, because you're buying at a price of earnings that just has never been seen before for the business, essentially. And it's just everything's depressed. Everyone's in, it's all bad. It's all bad right now. When you look at this chart, 5 year chart, it's all bad right now. Look at this triple floor right here. Boom, boom, boom. But for me, that's when it's time to buy. So, um, yeah, that's my spiel on Zillow. I think that this is a phenomenal business that I think long term will compound double digits for at least 10% return or greater. I'm thinking more towards like 15%. I'd be surprised if this doesn't go 15% a year for like the next 10 years or something of that nature. It's a surprisingly well performing growth stock because I think that the fundamentals are here, and I think that this could be, well, essentially, I don't have the kind of money to just drop on a home, but I have to acknowledge that housing assets are quite valuable. I mean, look at this chart here. That's kind of hard to deny, but I don't, you know, I'm a young Zoomer. I don't have like the money to just drop crazy amounts of wealth on a home. Like next week, hey, Linda, my agent, we're gonna go pick up a house. It's not gonna happen. So when I think about my opportunities and I look around at what's out there, I see this guy. I read about the business. I'm familiar with the business. I see the potential it has as that pick and shovel kind of play. And if you don't know what I mean by that, during the 49er California kind of gold rush era, the product was gold. Everyone was trying to get to mining gold. But a lot of people actually made crazy amounts of money selling picks and shovels. So the thing is, if everyone's chasing like, hey, housing market, buying and selling of homes, housing market, buying, selling of homes, I'm going to be buying the thing that helps people search for the homes, helps people get the mortgage, escrow, the titles. That's what I'm going to be doing. That's what I'm going to be doing. As long as the stock's anywhere below $50, personally, I like adding around here. So thank you so much for your time. I hope you enjoyed. Just remember, this is all for entertainment. Please take care.